the goal of this closing process is to net what we saw here. We have this credit balance, we have this debit balance. The net effect of this is, you can say, a credit balance 600. And this we would have seen in our financial statement. The income statement would have shown a net income of 600. Okay, so and let's just add one more to this. If we paid a dividend, okay, it would have been, whatever, 300. It would have been a debit balance because dividend is a debit normal. Okay, now we can net this and this together. What are we going to get? 300 credit. Okay, that's the net effect. I've reduced revenues, expenses, dividends into one net effect, which is credit 300. Okay, so that's essentially what we're going to do. Okay, and through a series of journal entries, we're going to move the balances around and get this net effect. Okay, so again, I just described it here. What this bullet point is saying is you're going to take the credit balances of the revenues and the debit balances of the dividends and expenses, net them together. You could have made a loss, right? Or you could have paid out more dividends than you earned in net income. So the net effect, it could be a credit balance or it could be a debit balance. You're going to see what that is based on what happened in your period. Okay, but you're going to figure out what that net effect is, either a debit or a credit. Okay, and then you're going to then update retained earnings with that debit or credit. Okay, and retained earnings, if you've made a profit through the history of your company, do you think that's going to be a credit balance or a debit balance? If you've always made a profit and you've not paid out more dividends than you've earned, what should it be? Credit, yes. Okay, so if you have a credit balance in your starting balance for retained earnings, you've made a profit in your period, you didn't pay out a bunch of dividends, it's going to be a net credit. So it's going to increase your retained earnings. Okay, so we're going to see that play out when we do these closing entries. Okay, one big area of confusion: adjusting entries, closing entries. They're two totally separate things. Adjusting entries are from chapter 3. They're actual economic realities that exist in our business, and we want our financial statements to reflect that, which is why we did those adjusting entries in chapter 3. Closing entries is just a bookkeeping thing. We're just moving balances around. There's no transactions. There's no economic event happening in our business. We're just moving things around. We're moving revenues, expenses, and dividends into retained earnings. Okay, and we'll see how that's done again in a second. Unlike the financial statements, which are just compiling things, these closing entries will actually change our balances, right? It's going to make revenue go to zero. It's going to make all the expense accounts go to zero. It's going to make the dividends go to zero. And whatever the net effect of that, retained earnings is going to change. So after we do these journal entries, it's going to actually change balances in our accounting system. Okay, so make sure you're clear about that. And because of that, order matters. You first get the adjusted trial balance, you make your financial statements, and then you would do these closing entries. Because if you did it the opposite, if you did the closing entries first, your income statement would be, you would have lost that information because you need your revenues, your expenses, and your dividends to make the income statement. Your balance sheet would actually be correct because what we're doing is we're updating retained earnings by incorporating the revenues, expenses, and dividends. So if you did these closing entries first, you would only be able to really produce one financial statement, which is the balance sheet, because your retained earnings would be correct. It would be the ending balance of retained earnings. Okay, so this diagram, I think, illustrates everything you need to do for closing, doing these closing entries in one shot. Okay, so look, there's 4 journal entries that you need to make. Okay, and they're all numbered and color coded here. The first one is credit revenue, debit this temporary account called income summary. So this first entry is, you can see, sorry, debit revenue, credit this. Okay, so let's say this is 100. Okay, so what we're going to do in this first one is debit revenue, 100, credit income summary. I'm just going to call it IS, 100. Okay, so you see here, this is a credit, this is a debit. This is going to now be 0, right? Because I just debited revenue 0. But I did not lose that information. It's now just moved to income summary. I'm going to do the same thing now, but reverse for expenses, because they all have debit balances, and I want them to go to 0. So I'm going to credit each expense by its, so let's say we had salary expense. Let's say it was $1,200. To make this go to 0, I need to credit it 1,200, and then I would debit income summary 1,200. So again, I've moved this balance to here, to this income summary. Okay, so again, I haven't lost any information. I'm just moving the balances. Okay, so now this income summary has basically in one account my revenue balance and my expense balances in one place. Okay, and then I'm going to figure out what that closing balance is. Okay, I'm going to net all those together. And so if my revenues exceeded my expenses, it's going to be a credit balance. Now, income summary needs to get closed. Okay, we're going to close this out because it's just kind of a fake holder account I've created. It's not a real balance. Okay, so I'm going to zero this out. So I'm going to, if in the case I have credit balance here, I will debit income summary, and I'm going to move that balance here to retained earnings. That's where it's going to live. So you can see here that this is a credit. Okay, that means that my revenues were more than my expenses, which is why this ended up being a credit balance. And then when I move that balance using this journal entry, it's also going to be a credit here in retained earnings. Okay, so I've just moved stuff around, I've netted it together, and I've dimensionally reduced what was happening. Okay, and I've put everything into one number. Okay, all my revenues and expenses. And then finally we close dividends. Okay, so we, just like we would have a $1,000, we paid dividends this period. I need to credit dividends, and then I'll debit retained earnings. And so you can see this is essentially my statement of retained earnings. We have a beginning balance. I'm adding my net income, assuming it's positive. We didn't make a loss. And I'm minus my dividends because it's a debit. And I'm getting an ending balance. Okay? So I've kind of represented my financial statements in my accounting system now. This would have been the income statement, and this is the statement of retained earnings. Okay, but now I've actually changed the balances because I'm doing journal entries. Make sense? I'll walk through this one more time, okay? Just so we're clear here. So let's say this is my ending balance. I reported this 3,500 in my income statement. Okay, now I'm done with my period. I've made my financial statements. It's time to close my accounts. My journal entry is going to be debit revenue 3,500, credit income summary 3,500. So, whatever, it's going to be revenue 3,500, income summary 3,500. This is my journal entry, and then I posted it, right? So now I have this 3,500 here, and then this is going to go here. We agree my balance is now 0 for revenue. We're good with that? Yeah? But I haven't lost it. It's still living here. It's just now in a different place. Okay? So now these are my different expense accounts. Okay? And the goal is to get all of them to be 0. Okay, so I already know I'll have to credit this 600, and I'll have to credit this 1,500. Okay, so I'll have, and then, okay, so let's just put in those two credits. So I know I'm going to have income summary. There's going to be some debit, but I have my credits at least to rent expense. There's going to be 1,500 credit and salary expense. Okay, so how should I get this to balance this journal entry? How much should I debit to income summary? 2,100, right? Okay, good. Okay, so I'm gonna now post this here. Okay, so now what is my balance in income summary? 1,400 what? This? Exactly. Credit. Okay, so make sure you get this right. You got to make sure it's going to be on the right side, right debit or credit balance. Okay, so these are 0 as intended, which I'm happy with, right? Okay, so now I need to close income summary. Okay, so I have this $1,400 balance. I need to debit this 1,400. I need to credit this 1,400. Okay, so again, income summary, debit 1,400, credit to retained earnings. Okay, so now this goes to 0 because it's a fake account. I need to make sure this is 0. It should have no balance because it's not real. It's just a placeholder. Okay, so I'm happy. This is now kind of gone, and I've moved the balance here. Okay, so what is my balance now for retained earnings? 11,900, right? Credit. Okay, so now final one, the fourth journal entry is to close dividends. So I will need to credit dividends 800 to get this to go to 0 and debit retained earnings. Okay, so again, the journal entry is debit retained earnings 800, credit dividends. Okay, so now what's my ending balance for retained earnings now? Credit 11,100. Okay, and this is the balance that's going to carry forward to the next period. Okay, and I'm happy. My dividends are 0. My expenses, where is it? Expenses are 0. This one, and my revenues are 0. That's my goal for this whole process.